Hey there, fellow Americans. Breaking news that's got everyone talking: the IRS just dropped a bombshell announcement about $2.8 billion in direct payments hitting bank accounts before Trump potentially takes office. If you're eager to learn if you qualify for these $1,950 checks coming in January 2025, make sure to hit that subscribe button and notification bell so you never miss out on crucial financial updates like this one. Have you been wondering how these new payments might affect your financial future? Well, you're not alone. Today, we're diving deep into this massive development that could impact millions of Americans. The Internal Revenue Service's recent announcement has created quite a stir, especially with the timing coinciding with the potential political transition. But what does this really mean for the average American taxpayer? Let's break down this unprecedented announcement. The IRS has confirmed that approximately $2.8 billion in direct payments will be distributed to eligible Americans, with individual checks averaging around $1,950. But here's what makes this particularly interesting: the timing of these payments is strategically set for January 2025, just as the presidential transition would be taking place if Trump wins the 2024 election. You might be wondering, is this just a coincidence, or is there more to the story? The eligibility criteria for these payments are more comprehensive than previous stimulus measures. The IRS has established a multi-tiered system that takes into account various factors including income levels, tax filing status, and household size. For single filers, the income threshold is set at $75,000, while married couples filing jointly must earn less than $150,000 to qualify for the full amount. But don't worry if you're slightly above these thresholds, there's a gradual phase-out system in place. One of the most pressing questions we're hearing is, how does this compare to previous stimulus payments? Unlike the COVID-era stimulus checks, these payments are being structured as tax rebates, specifically targeting individuals who may have overpaid on their taxes during the 2023 and 2024 fiscal years. The IRS has implemented new algorithms and verification processes to ensure accurate distribution and prevent the issues that plagued previous payment rollouts. But here's something crucial you need to know: the application process isn't automatic. Even if you qualify based on your income and tax status, you'll need to take specific steps to ensure you receive your payment. The IRS will be launching a dedicated portal in mid-2024 where eligible recipients must verify their information. Have you checked if your current information with the IRS is up to date? This could be the difference between receiving your payment on time or facing delays. The economic impact of these payments is expected to be significant. Economic analysts project that this injection of funds could stimulate local economies and provide much-needed relief to families still recovering from recent economic challenges. But what's particularly interesting is the timing. Why January 2025? Some financial experts suggest this could be part of a larger economic strategy to maintain stability during a potential political transition. Here's something many people are overlooking: these payments could have implications for your 2025 tax returns. While the IRS has confirmed that these payments won't be considered taxable income, they might affect other tax credits or deductions you're eligible for. Have you considered how this might impact your overall tax strategy for 2025? The distribution method for these payments is also worth noting. The IRS plans to utilize direct deposit for the majority of recipients, which should expedite the process significantly. However, for those without direct deposit information on file, paper checks will be mailed out starting in early January 2025. The question is, which method would work best for you, and have you updated your banking information with the IRS recently? Security measures around these payments have been substantially enhanced compared to previous programs. The IRS has implemented new anti-fraud protocols and verification systems to prevent the kinds of scams and identity theft that occurred during previous payment distributions. But what steps can you take to protect yourself from potential scammers who might try to exploit this situation? Let's talk about the broader economic context of these payments. With inflation concerns and market volatility still present, how might these payments affect the overall economic landscape? Some economists suggest that the timing of these payments could help buffer any potential market uncertainty during the presidential transition period. But what does this mean for your personal financial planning? The impact on different demographic groups varies significantly. Families with dependents might see additional benefits, as the payment structure includes supplemental amounts for qualifying children. Single parents and heads of households have specific considerations to keep in mind. Have you calculated how much your household might be eligible to receive based on your specific situation? Here's an interesting aspect that's not getting enough attention: the potential impact on small businesses. As these payments roll out, local economies could see a significant boost in consumer spending. If you're a small business owner, have you considered how you might position your business to benefit from this incoming wave of consumer spending? The administrative logistics of this payment program are impressive in scale. The IRS has been upgrading its systems and hiring additional staff to handle the expected volume of inquiries and processing requirements. But what does this mean for you if you need to contact the IRS about your payment? Understanding the best channels for communication will be crucial. Let's address some common misconceptions about these payments. Unlike some previous stimulus programs, these payments are not advances on future tax refunds. They're legitimate tax rebates based on past overpayments. But how can you ensure you're not counting this money twice in your financial planning? The international perspective on these payments is worth considering. How might these domestic payments affect international markets and currency exchange rates? For Americans living abroad, there are specific considerations regarding eligibility and payment receipt. Have you considered the global economic implications of this massive payment program? The role of state governments in this federal payment program is also noteworthy. Some states may provide additional supplemental payments or tax benefits in conjunction with these federal payments. But how do you know if your state has any complementary programs, and how might these affect your total benefit? Looking at the long-term implications, these payments could set precedents for future tax rebate programs. The success or challenges of this distribution could influence how future administrations handle similar situations. What lessons can we learn from previous payment programs to make the most of this opportunity? The impact on different sectors of the economy is expected to vary. Retail, housing, and consumer services might see immediate benefits, while other sectors might experience indirect effects. How might this affect job markets and investment opportunities in different industries? For retirees and those on fixed incomes, these payments could provide significant relief. But how should this group specifically plan to use these funds? Are there special considerations for Social Security recipients or those receiving other federal benefits? The technology infrastructure supporting this payment program is more advanced than previous efforts. The IRS has implemented new digital tools and automated systems to streamline the process. But what does this mean for those who are less technologically savvy? What alternative methods will be available for those who need them? Privacy concerns are also being addressed in this program. The IRS has implemented enhanced data protection measures to safeguard personal information during the payment process. But what steps should you take to protect your personal information while ensuring you receive your payment? The impact on credit markets and lending institutions is another factor to consider. How might these payments affect credit availability and lending practices? Could this influence mortgage rates or personal loan terms in the short term? For those planning major purchases or investments, timing becomes crucial. Should you wait for these payments before making significant financial decisions? How might these payments affect market conditions for major purchases like homes or vehicles? The program's effect on different age groups varies significantly. Younger Americans might view these payments differently than older generations. How should different age groups approach these payments in terms of spending versus saving? Environmental considerations have also been factored into the distribution plan. The IRS is implementing more electronic payment options to reduce paper waste. But how can recipients contribute to these environmental efforts while ensuring they receive their payments? The role of financial institutions in this process is crucial. Banks and credit unions are preparing for the influx of deposits. What should you ask your financial institution about handling these payments? For those with outstanding debts or liens, there are special considerations. How might these payments be affected by existing financial obligations? What protections are in place for recipients with various types of debt? The impact on charitable giving is another interesting aspect. How might these payments affect donation patterns and nonprofit organizations? Could this present opportunities for increased charitable contributions? Looking at housing markets, these payments could influence rent payments and mortgage markets. How might property owners and renters alike be affected by this influx of funds? The effect on education spending is worth considering. Could these payments influence decisions about education expenses or student loan payments? What opportunities might this present for educational investment? Healthcare considerations are also relevant. How might these payments affect healthcare spending and insurance decisions? Could this timing align with annual healthcare enrollment periods? The impact on retirement planning deserves attention. Should these payments be factored into retirement strategies? How might they affect retirement account contributions? For small investors, these payments could present opportunities. How might this affect individual investment strategies? What should small investors consider regarding timing and market conditions? The effect on consumer behavior patterns is expected to be significant. How might spending habits change in anticipation of and following these payments? What trends might emerge in consumer confidence? Local government services might see impacts from these payments. How might local economies and services adapt to this influx of funds? What should residents know about local implications? The timing relative to tax season is significant. How might these payments affect tax preparation for 2024 and 2025? What documentation should recipients maintain? Digital currency considerations are also relevant. Will there be options for receiving payments in digital formats? How might this affect the broader adoption of digital payment systems? Employment markets could see interesting effects. How might these payments influence job seeking and hiring patterns? What should both employers and employees consider? The impact on various industries might create ripple effects. How might different sectors prepare for and respond to these payments? What opportunities might emerge? Finally, the long-term economic implications deserve careful consideration. How might these payments affect economic planning and policy moving forward? What lessons might be learned for future programs? Remember, staying informed about these payments is crucial for maximizing their benefit to you and your family. Have you taken all the necessary steps to ensure you'll receive your payment? Don't forget to subscribe to our channel for continued updates on this and other important financial news that affects your wallet. Drop your questions in the comments below, and let's keep this important conversation going.